thank you, Spider Software, for inviting me as a guest speaker for the current market scenario. And I mean, it's really interesting, and the number of participants that we are having right now. I mean, I'm so good that that it's an overwhelming response. One thing I would say that despite the lockdown which has happened, I would say that markets are continuing. So far we were considering, or few people were considering, even I was one of them, always so that everyone remains safe. Now everyone is safe and everyone is at home and using the use of technology. At least we are busy at home. Otherwise, people are not knowing what to do at home. I mean, especially the manufacturers and all, they're very much confused as of now, unclear. As in today also we had actually heard our honorable Prime Minister in the morning that the lockdown has been extended, which is a very wise decision, very correct decision, and that has been extended. And I think it should continue to happen so till we don't see a clear cut medicine, vaccine, or the flattening of the curve of this COVID-19. So something has to happen on the positive side in order to lift the lockdown. Till that doesn't happen, I think the continuation of the same is the prudent thing to do as of now, which has been done by our honorable Prime Minister and the other state chief ministers, which is quite good. Now, as far as markets are concerned, I would say that yes, now you all can see the screen of the Spider software Iris. So that's how we go to the chart, and I've saved on chart. Let's just see that whether the chart has been saved properly by me, and whether we can see that screen or not. So just a minute, it'll just load. Yeah. So yeah, that is the screen we have. I mean, generally, I prefer looking at the different time frames. As far as taking a view in markets is concerned. So taking the different time frames, by that I would say that one is daily, and another is hourly, okay, and the one is weekly. What we can also have is that in Iris there is one special thing which you have the query which you can run with days high, 52-week high or all-time low, or maybe in the bearish side you can have days low or 52-week low, all-time low kind of thing. And when the markets are on, basically you get all these days high and days low and whatever other queries you want. I mean, those all queries results will come here. What else? What else you can do is you can also have or add a price watch to you. A price watch can be a exchange defined one. So we can as of now look at the NSE FNO script. So that would come here. Now there is one setting wherein I have you can add on the momentum indicators over here. So initially I would say that let's just have a look at the MACD first. And then we'll look at the other momentum indicators. So we have MACD. Look at the parameters, which is 12, 26, and 9. Perfect. On the hourly charts, we have that, and you add that on the weekly charts as well. When you add this, so you have this, momentum indicators, volumes, both of and price. So you have these three charts on each of the price charts. Okay. Now, basically, whenever you need to see that whether your script is sync or not. So if you look at all this time frame at one go, then you can also script the sync the scripts, I would say rather. So I mean, if you change the screens, as of now we have torrent power on each and every chart. So if you want ACC will come at each and every screen, and then you have daily chart, hourly chart, and weekly chart. So what happens is basically at one go you can take a view on all each and every one of them. So let's look at Nifty first, and let me first start with the market view of Nifty, and thereafter we come to these Bank Nifty, and thereafter maybe mid and small cap indices, and Bank Nifty and everything. Step by step we go. First I start with the Nifty. Well, interestingly, friends, what has happened is see, markets are pattern. One thing we very well know that markets are pattern, and this is the daily chart of Nifty. Okay, right from the inception almost, I would say it's not entire data, but then yes, quite a lot of data, I would say. And what we can see is that markets since past 2 weeks, is in, if I just add on here, you can see the date and everything is there in the inner window itself. So we can see that market since 24th of March have started to bottom out after forming a bottom at 7,500 levels or so. And thereafter, it's been slowly and steadily forming higher tops and higher bottom on the daily charts. You can see that happening on the weekly charts as well over here. We can see higher tops, higher bottom getting formed. On the hourly chart as well, you can see the series of higher tops and higher bottom getting formed. It's just that over here we are in the very near term, we are here, and on the hourly charts, and you can see that there is some consolidation happening here now since past couple of days. So 1, 2, and 3 days, markets are not able to surpass or sustain above its previous swing high. Whenever, even if it closed for one day on the positive side, the last trading session, that is yesterday, we saw market closing in the negative territory. So somewhere here near levels of 9100 to 9200. 9200 is where we are seeing some resistance, and there is where also where we have seen good amount of call writing also happening. So 9200 really needs to get taken off in order to have a further uptrend from current levels. So that's a short-term view as far as markets are concerned, that we should see market in fact getting higher or crossing the levels of 9200, and that's the range which we have been seeing. Now on the lower side, what happens is, friends, when you join this line, it becomes a support, because since it has formed higher tops and higher bottom, so in order to form higher tops and higher bottom, what you can do is you can just draw a trend line over here by typing a T, and getting that to the low and joining that to the recent low. What you get is the, we also around the colors, but let it remain white. It looks better in fact in the black background. So I would say that this is now the support, and we all know that this is the resistance. So now if you see the broader range of market, it is 9200 on the upside somewhere, and on the lower side straight from here, if you see, it comes to around 8300. So you can see if it takes some time, it can be 8400. 83 to 84 is the range on the lower side. 91 to 9200 is the 9100 to 9200 is the range on the upside, not the 9200. It can be more than that, 9250 or something, but not less than 9200. This is what we can clearly see out here. So 9200 to 83, 8400 is the range for the short term. We can see this range if it breaks higher, as the SGX Nifty has been suggesting. Now, if you look at the SGX Nifty right now, right? So let me just check what is the SGX Nifty right now. All it can, because I saw it was quite positive. Right now it is showing 9219.80, 9220 it is. Assume that it opens gap up in 9250 or 9300. So we can see further continuation of the trend. Now, how much trend continuation on the upside can happen to? So one thing is that I would say that this fall so far has been an impulse fall. There is a five-wave declining structure. I can see this fall right from the levels of 12,246 until 7511 has been quite impulsive fall. So generally after an impulsive fall, what we see is we tend to see a retracement of the entire fall. So the retracement, even if we take say it's been 70.6% of, obviously it's not going to retrace by 100%. So even if we say it's going to retrace so much, let us check how much retracement can it do. So here we have a retracement tool, and the retracement which we are looking out right now in the markets comes to around the levels of 9300, and after 9878, and 50% retracement will come to 10,437. Okay, and this is the 61% replacement, that is 11,000. Sorry, this is the 38%. See, these are percentages are 38, 50, 61. So 38% is already at 9320. If you have seen most of the global markets like US, US, Nikkei, the European markets, they all have retraced 38% of their recent fall. So what we can also assume safely is that Nifty will also retrace 38% of its recent fall. So 38% comes from 9320. That should be the ideal short-term target. And about 9330, we can see 50% retracement until 9878. All we know that the markets since they have started to form higher tops and higher bottom. So till the recent bottom is not broken, okay, of 8055, the trend in the short term remains up. If 8055 gets broken, then definitely the trend will again shift from up to down, and below 8055 we will see this lows or 7511 will be broken as well. So right now, as I said, the range is 83 to 92, and the reversal level is at 8055. On the upside, the reversal level is at 9200. Above that, we can see 9320 to 9870. These are the retracement levels which we can see here. Here you can clearly see 9320 to 9870. So you can see higher tops, higher bottom. You can see uptrend line support. You can see also that in the momentum indicators, the volumes have the indicators have already turned into a buy mode. From the daily chart, the indicators have provided a buy cross, which is quite positive. On the weekly charts, I would say the indicator MACD, which is a lagging indicator, but however, it provides a good confirmation. So the MACD is still in the sell mode. So you can see that the larger trend or the medium trend is down. Let us check also on the monthly chart. On the monthly chart, what we can see is the MACD is on the sell side. It's in the negative or in the sell mode. Although it has reached to the zero reference line, the red line is yet to reach there. The weekly indicator, if you see, it's definitely negative because it is trading below the zero reference line. So in the daily chart, the momentum indicator is trading below the zero reference line. So all we can assume in this bounce back is that since this has come to a buy, so in a daily it is in a buy, on a weekly it is in a sell, and a monthly it is in a sell. That means that the medium term trend is down, the short term trend is up. Now within the short term trend, what are the targets? So targets I already told you. The targets comes to the levels of 93.20 to 98.78 in the Nifty, that is 30 to 50% retracement. Now there is one more tool that is called extension. So generally, when we have a 5-year declining structure, what we can also have is an extension on the upside. Assume there is going to be A is equal to C wave, then 100% extension. Let us see how much that can come to. If there is A is equal to C wave, right, that is going to happen. All we can see that Nifty can bounce back till the levels of 97.15, which will be near somewhere to the 50% retracement mark. So now, right now, we have three targets. One is 9200 on the upside. If that gets taken off, then 9320, 93 we have taken off, then 9715, 9715 gets taken off, 97, 9878. These are the probable targets in the near term. In the very near term, what is the support? In the very near term, if you see on the hourly charts, I can also zoom this chart. See, this is how I've zoomed it. So if I can see here, and this is how a hat option high bottom has been forming on a larger degree. And if I go on the line chart as well, so this becomes a very crucial swing look. So till 8700, 8750, till we don't see a close below that, the overall trend is positive because on a larger degree this high was taken. So here we have in a very short term, very near term, 8930 is the support. Below 8930 we have 8740, and thereafter we have 83 to 84. These are all on the closing basis. On the hourly basis, on the swing side, on the bar side, we have 8912. You can see the lows or open high lows there in the inside bar, inside table. So 8912 is the support. Below that, we have support at 8700. So 8900 to 8700 is the support in the short term. Medium term support is 80 300, and the long term support I can say as of now is at 8055. So that's how I've arrived at all the supports and I've arrived at all the targets, and this is how we do supports and resistance, right? So resistance level is what I've explained to you, support level is what I explained to you. I've also given you the view on Nifty. So all I'm expecting right now that since the monthly and the weekly momentum indicators still they are on the sell mode, we think that the recent rise is just a bounce back. It's a X wave bounce, it's a B wave bounce, it's a phony wave bounce. It's a it's I would say for a medium to long term it is a bull trap. This is what all has been happening. But then in the short term, since you get such a huge spike in the stocks and index as well. I mean, last week was one of the phenomenal week, I would say, wherein we saw Nifty, in fact, which had actually closed around 8,050, 85, and closed around 90, about 9,100. So there was a rise of more than 10%. I would say it was like around 15% rise on the index in 1 week. So that is not small. So even it is a bull trap or a bear bounce or it is a short covering rally or a phony wave, whatever. If you are quite capable of playing this kind of moves as well, sometimes on a larger degree, it eventually provides you a good amount of returns in the very short term. And we being a technician, we need to actually enter and exit at very well compared to the other guys who are non-technicians because we can understand the reversal. All we know that still this higher tops and higher bottom continue, the probability of an uptrend is high. So all we know is that till this uptrend line is the support is held or till this swing low is held, the trend is up. But if this swing low breaks, we as a technical analyst or we as a technician know that a trend might have reversed and now 7,500 will break. So we know that with the help of technical analysis and with the help of charting tools, we know when to enter and exit. We can actually go short also below this. We know when to short, when to go long. So we should definitely take the advantage of the same. Now also you can take the this is how the targets have been arrived and I've showed you everywhere. So I'll just delete all those targets now. So that's how you delete. I mean, you just go to remove tools, select all, and you can delete. I have shown you how to basically look at the momentum indicators and what are the price targets and what are the support and resistance levels. I already told you all this. Also, one thing from which I can come to know that still there is a this is a bull market. This is not a bull market. This is just a bear market. Like the reason is that you can see that the volumes have not expanded quite a lot. I would say that although right now you can see that there has been some increase in volumes right now in the recent rise, but the overall trend is still down. Overall trend is still down. So we for some whenever bottom gets formed or a larger bottom gets formed on those particular day or week, you see a volume spike which will go above the previous highs. Okay, and thereafter it can come down, but once or twice at least it will go above the previous highs. Okay, so when the market had top earlier, okay, when the market, see here when the bottom was formed at around 7500, there was huge increase in volume. That time bottom was formed. Similarly, when the top was formed somewhere here, you see the increase in volume and gradually decrease in volume. In fact, on Nifty, what we have seen that we had a now let me just remove the retracement levels. Now, see, in the Nifty, one more thing interesting is we had seen this. We were very sure of the fall coming in because we saw this ending diagonal pattern that was formed on the Nifty chart. So all those technical analysts who knew that ending diagonal pattern was formed, okay, they very well knew that the fall is going to come because ending diagonal pattern or a rising wedge pattern is a bearish pattern, it's a bearish reversal pattern. So when it broke, in fact, it further gave a confirmation. Generally, the targets are from the where the wedge pattern starts. So the target was coming to 10,000 or 9,900 initially, and thereafter the retracement of 9,600, and thereafter 9,000. This was a clear support when on Nifty. Because this why was this support? Because earlier it was acting as a resistance. Okay, and when it actually broke out of it, it became support. So this was support, which broke, but then now Nifty is flirting with the support. All we can also add is the moving averages now on this. So let us add the moving averages. Average. So let us add the 200 daily moving average. We can see that 200 daily moving average is quite far. That was a weekly chart. I'm sorry, a weekly chart that was formed. You just see a simple daily moving average is quite far from here on. So market is well below its 200 DMA as well. So it is well below its 200 DMA. How do we assume that the market is going to be bottoming out so soon? And now if we want to change this to exponential, we can change it to exponential. And that is also coming too far. Now let us see on the hourly charts. What is the hourly 200 DMA? So see, market is very near to its hourly 200 DMA. And let's see the exponential now. So that's the exponential. Somewhere around say 9300 or something like that, 9375, we have a 200-day hourly exponential moving average resistance, and that also coincides with the retracement levels. So if you basically do 38.2% retracement of this recent fall, which has been very much impulsive. Okay, then that 38% comes to 93.20, whereas this, you can very well see where the 200 DMA is, or the average is. It is coming right now to 93.55. So 93, 93.50, and 93.20. These are these very critical level. And in fact, market right now needs to take about the levels of 9200, and after 9200, 93 and 93.50 will also act as a resistance on the immediate basis because that is where we have 200 DMA. On the hourly charts. So this is one parameter which keeps on actually telling you whether it is a bull market or a bear market, or whether a trend is up or down. Below that, till it remains, the overall trend remains down. If it continues to move above that and thereafter forms higher tops, higher bottom, then we can assume that a trend of a shift of a trend from bear to bull. Now all we can do is add one more indicator, which is called 50-day moving average on this. Okay, so we had a 50-day moving average, right? So here you can see we on the hourly chart we are seeing a death crossover, and thereafter market just fell. So when the uh, I can just zoom that chart. So when a 50 hourly moving average basically crossed the 200 hourly moving average, or the 50 daily moving average also basically add that as well. So when a 50 daily moving average breaks the 200-day moving average. See, we are just seeing the that crossover happening on the daily chart. So on the daily chart, we have seen 50-day moving average cutting the 200-day moving average. This is called the death crossover. That means market turning from bear bull market to bear market. That has just happened. Okay, and on the hourly charts, we are seeing that happening quite earlier. Okay, now is the time on the hourly charts for the short term. We can see if all prices move about this 200-day moving average, then we can see 50-day moving average going up quickly, and we can see a golden crossover as far as on the hourly chart is concerned. But so that's how short term and medium term and we take. So for the daily chart, you see the 200 DMA is very well above the prices. The 50-day definitely is above the price. This and 50-day moving average in fact has crossed the 200-day moving average from the up. Hence, we have seen that crossover happening in the index, so which is also showing that the medium term trend or the long term trend is negative for Nifty. Hence, this bounce as of now should be understood or taken as a dead cat bounce or a short covering bounce. I'm repeating this again and again. There is a dead cat bounce, short covering bounce. Let us see till what levels we continue to see this. Okay, support levels I've already shown it to you. It is between 8700 to 8900 in the short term, whereas in the medium term it is 8300 and 8055 in the long term. Whereas the short term target comes to around 9300, 9200 first, which is this, and thereafter it comes around 93, 9350, which is coinciding with the 38.2% retracement of the last fall, as well as the 200-day exponential or 200-day simple moving average on the hourly chart. Because it's not daily, it is 200 hour chart average, and above that if it goes and manages, then we can see the levels of 9800 to 10,000 levels as well. I mean 9700 was one level which we are seeing using the extension tool of A is equal to C, and that's how we are seeing that if this is wave A, if this is going to be wave A, then we can see wave C also on the upside. So that is also what we are seeing. Now apart from this, friends, other tools which we can use is the RSI. Okay. So looking at the RSI also, we might understand that what exactly we are and what we need to see. Let us look at the parameters 14, 9, and 5 perfect. So this is the hourly, sorry, yeah, 14 and 9. Okay. So that is the RSI, which has actually gone down quite a lot. In fact, if you see, it had gone down on the daily chart to the historical lows level. See, these were the lows which we had seen in fact in 2008 or probably in 2004, the bear markets. 2004 when the BJP government actually fell, and there was a lower circuit in 2008. We had seen that because of the global crisis, and now we've seen this to quite an oversold territory. Since it was an oversold territory, despite the COVID-19 cases are increasing in the world level, we are seeing a bounce. Why we are seeing a bounce? Because this is nothing related to coronavirus right now or increase in number of cases right now. It is just that since it had gone that much oversold, that there were very less shorts only available in the market. And since there were less shorts available in the market, since market was way too down, the shorts were not able to comfortably short only further. Hence, they had to cover the short. Hence, we have seen the short covering rally, and because of which there is some fuel coming in the upward movement because of some fresh buying as well. Because that also happens a bit. We saw that FI in fact had turned positive. In fact, in the last trading session, both FI and DI were negative. But prior to that, we had seen that FI actually was positive for a couple of trading sessions. So that got them back over here, and because of which we saw that fresh buying also happened and short covering also happened. Because with this market, in fact, bounced back from quite an oversold trade. Because generally it is considered that 30 is quite an oversold territory and 70 is an overbought territory, but it always doesn't remain the same. Right now, see if you check, then we can have this horizontal line here. I'm sorry. So what we can have is in the tools we can have a horizontal line as well. And, that's how. Or else let me just check directly over here that 50 is level coming somewhere here. So I'm going to do these levels. Right now, RSI, if you can see in the box, is somewhere around the levels of 39.84 or something like that. So it can go to 50 levels. The RSI can come to 50 levels. Green is the signal line giving buy and sell on the RSI. Okay, 9-day average of the 14-day RSI. Okay, so RSI still can come to 50. Okay, which is the middle level. And really need to see whether it surpasses middle level and thereafter reaches to 70, or if it reverses to from middle level only. Like in MACD, it will be really important for us to see whether it goes above the zero reference line and get into the positive territory, or whether it reverses back from the zero reference line. So, the indicators remaining below 50 or remaining below the zero reference line clearly indicates that till that continues to happen, the overall trend in the medium term is supposed to be negative. So, short term, I'm bullish. I'm bullish in the short term till 8,300 and 8,055 is our levels are held. And on the upside, I'm expecting the target of 9,200 to 9,300 and thereafter 9,700 to 9,800 on the upside on Nifty. The short term is bullish, higher tops, higher bottom indicators on the daily early charts on the well on the buy mode, and retracement yet to happen at least for 38.2% of the entire fall. And all of those parameters are making me quite comfortable to be on the long side till until unless we don't see a reversal. And then, as in technical analysis, we always say that ride the trend and continue to ride the trend until unless we see a lot of evidence that the trend has reversed. As of now, I am not seeing any evidence that the trend has reversed. So how do I sell? Right. But one thing to keep in mind is that based on the parameters like MACD is below zero, the RSI is below 50, the weekly MACD and the monthly MACD are in sell mode and are below weekly also is below zero. We've seen a death crossover happening on based on the moving average on the daily charts. The volumes are in fact not expanded that much to an extent wherein we can call it as a bull market or a bottom has been formed. Okay. Then what we can do is also we can add the Bollinger Bands. Okay. So this software is very handy, so you can easily get to your parameters. And if you want to take the two standard deviation, you can take two. If you want to increase from 2 to 2.5 or 3, you can do that as well. So this is the daily chart, and on the daily chart, I've applied the Bollinger Band. Now here you can see that near the lower Bollinger Band, market was again and again finding support. Finally, it found support around the lower Bollinger Band. It has this white line is the mean, is the 20-day moving average because we have taken in the Bollinger Band 20. You can also have the expansion, okay, exponential. So if you want an exponential, if you're a fan of exponential moving averages, you can have exponential. There is where market is near, hovering around the 20 exponential moving average as well on the daily charts. Now, generally, what happens is when market takes support at the lower end of the Bollinger Band, it first moves to the or reverse back to the mean. So it is called a mean reversion technique, Bollinger Bands. So it's reversing to the mean, and if it surpasses the mean, then it will go to the upper end of the Bollinger Band. In the downtrend, generally, what happens is basically prices move toward their mean, and from there it again falls back, moves to their mean, and again fall back. This now in the short to medium term is actually attempting to move above the mean, which means that if at all we see a breakout, if at all we see a breakout from this RV chart and above this 9200 level and this exponential moving average, then we can see the Bollinger Bands in fact will start to expand and we can see Nifty going further. You know, whenever see a contraction in the band, see here there was a lot of contraction in the band. See, this entire phase saw a lot of contraction in the band, and whenever this contraction in the band happens, see, the contraction in the band, then expansion happens, and you get a trend. So after the contraction, you get an expansion. After expansion, you get a contraction. So I'm also expecting, in fact, the bands to contract if at all possible. If bands expands or contracts, thereafter we'll come to know that the markets will remain sideways. So whenever bands are contracted or within a very narrow range, that means markets are in a sideways momentum. Whenever it provides a breakout from that band, the further trend on the up or down is thereafter considered. Right. So you can also look at these Bollinger Bands. It's a very good tool, and you can also check on the weekly charts where the Bollinger Bands are in fact right now. The weekly chart too, we saw that Bollinger the index was trading very, very well below the exponential. If you want, you can increase the parameter to 2.5 standard deviation as well. Then to the prices were trading well below its weekly Bollinger Bands. Whenever prices break the band and starts trading below or above those bands, the trend is said to be very strong. So this trend was very strong when it moved below the band, and thereafter the band itself acts as a resistance. Now, in the last to last trading session or trading week, we saw prices in fact fell back into the band, and once it is back into the band, we can see the mean reversion happening. So the weekly charts also there can be some mean reversion. If at all spend some time that this mean will come down and prices will go up, and we can see the completion of the mean reversion, right? So as far as Nifty is concerned, I mean, we have seen from all the parameters like RSI, MACD, Bollinger Bands, death crossover, Bollinger Bands, mean reversion, that how the markets basically go up and down. You can also use the candlestick pattern. So if you just press J on the chart of the uh, iris, spider iris, then you get candlestick charts, and if you type D, you get of the bar charts. And type L, then you get the line charts. Here are the candle charts. So in the candle chart, you can see as well which candles are getting formed. Here we saw spinning top, in fact, getting formed. In fact, we go to kind of bullish harami candlestick pattern that was formed because we had an inside bar pattern. And in fact, in a bar, you will say this is an inside bar. In US, we'll definitely say that this bar qualifies for an inside bar. And we did see a breakout from an inside bar or a bullish harami pattern. We saw a breakout from this bullish harami, and thereafter market started to turn higher. So this bullish harami also you can see, and see in spider generally, what important thing else we have is, you know, one more thing is that you could also basically understand what the candlestick patterns are. So you can check those candlestick patterns as well. Here it is. So they have some predefined candlestick patterns here. Okay, see, predefined, not all, but some predefined candlestick patterns they have. So you can see that few candlestick patterns are getting formed here. That's called pattern finder. And then if you don't want, you can remove the study as well, else it will. Now one more thing what you can add is the KST. KST is generally faster. It's called no sure thing. Okay. So no sure thing parameters also let us check. When there's 6, 12, 18, 24 days of ROC and it has 9 days of average. So it is a combination of all the ROCs and you've taken the exponential. KSTs are generally faster than MACD. See, MACD provided a buy crossover somewhere here, KST provided somewhere here itself. So KST provided a buy crossover here, MACD provided a buy crossover somewhere here. So it provided at least 3 days prior to MACD. So it's a faster. So the reading is same. It is also trading below the zero reference line. Okay, and those people who are not using say Bollinger Bands, or those people who are not using the Bollinger Bands, what they can do is they can also use the Kettner channel. So you can add these channels, Kettner channels as well, and you can see that it is reversing from the lower end of the channel. You don't want to use the Kettner channel, then what you can do is there are many tools which you can use, and you can understand markets. You can understand where the support and resistance are. So either you can also take what we have is volatility band, something like that is what we have. Okay, so you really need to check basically that you have other sort of bands or not. These are all the many people use super trend as well. Whether super trend is well in a buy or a sell. So this is a super trend which we have. I mean, that will always act as a support and resistance only. Okay. There are various studies which are available, friends. You really need to check which one you want. There are stochastic. Stochastic is too fast, so I do not look at the stochastic. It is too fast, but some people who are master at stochastic can use. Okay, I generally use RSI, MACD. I use KST as well, very extensive because KST I already told you is faster than MACD. Okay, then you can use parabolic SAR. Now what happens is basically see friends. See, this is the parabolic SAR. Now, what happens is you have bought something. You bought something, and hat of sell button has been forming, and you are in the buy mode. And if you want to trail your stop loss, then you can trail it to the parabolic SAR. Okay, so when you were short here and you kept on shorting, this parabolic SAR becomes your trailing stop loss. So always keep one thing in mind that parabolic SAR becomes your stop loss. Okay, a trailing stop loss level. If you want to find, you can find using the parabolic SAR. Below that, the trend is supposed to be change. Parabolic star can also be a good trend reversal indicator, which I use it extensively. So as of now, that comes to around 8,000, which is the medium term reversal level. You can use that on the RD charts as well, the parabolic star. Okay, see. Now that for that, the support is coming somewhere around this. So till the Nifty is trading above this parabolic star, to continue to be bullish. Now, you have the stars up and down, okay, which can act as a support and resistance as well, and a good reversal. And they are very quick. They are very quick comparatively. So let me keep this star as it is. Okay. Now let us have a view on Bank Nifty. Okay, now see, Bank Nifty has been underperforming the Nifty, I would say. We have seen the death crossover happening on Bank Nifty as well. So I will just zoom the chart. So death crossover happening on the Bank Nifty as well. Okay, it has come above the parabolic star and now it has taken a support of the parabolic star and moved up again. Okay, so that is quite a positive thing, I would say. As far as indicators are concerned, all we can see is that the MACD is well into the buy mode. RSI is reaching plus 50 and it has gone above the 30 levels, which is quite positive. And the KST is also in the buy mode with a positive divergence. With a divergence, I would say, or not a divergence, in fact, it is very in the positive divergence. We can see here hat option, high bottom forming here on the KST as well, like it has been forming on the RSI. So we've got this trend line on the RSI as well, the KST as well. I'm going to find out the support and resistance. And to it all, we see right now in the early chart, then Bank Nifty is actually trading in a very narrow range. That's been the range of 20,400 to 18,600. So Bank Nifty range is 18,600 to 20,400. There is 800 points range, and wherever a breakout or a breakdown we will see a further move. If at all Bank Nifty moves about 20,300, 400, and we will see the next resistance coming to 22,000, which is this 200-day early moving average. So next target will be 200 day moving average, 200 early moving average, which is coming to 22,000. If you also see the channel target, then channel target for Bank Nifty is coming. Sorry, I'll draw the channel again. The channel target for Bank Nifty is coming to the levels of almost 23,000, whereas the early 200 early target is coming to around 22,000. Support is 18,600, and thereafter it will be 17,500. And the final support, as of now, the final support I would say for the Bank Nifty is this, which is 17,100. So these are the support levels: 18,600, 17,500, and 17,100. Whereas on the upside, we can see 20,400, 22,000 directly above 20,400 above that, directly 22,000, and thereafter 23,000. These are the targets for Bank Nifty. Okay. On the weekly chart, if we see that Bank Nifty 2 is trading below its zero reference line momentum indicators, it means that the overall medium trend is down, and we have seen this death crossover happening here as well. And if you see the 20 and 50 day, 50 hourly moving average, I mean that is also well below. See, this is the 50 day hourly moving average. This is the 200 day hourly moving average. So that too also, after having provided that crossover, has never provided a golden crossover. The short-term trend is positive based on other indicators, but overall trend in the medium term still looks quite negative for both Nifty and Bank Nifty. Hence, I am assuming this to be a bear market rally, the rally which will continue on the upside, but is labeled as of now as a bear market rally until unless the evidence proves that the long-term bottom is small. Okay, but till that happens, let us enjoy at least this bear market rally. At least this bear market rally also from current levels, if it comes to 22,000 or 23,000 itself, it will give you 10 to 15% upside, right? So that is the view on Bank Nifty. Now let us have a view. Okay, now next on which of the sectors have basically bottomed out. So prior to that, I can let us also look at the Nifty mid and small cap indices. I mean, many people are invested in mid and small caps, so let us look at mid cap. The mid cap also index, if you see, the index in fact has, if you see the early data here, okay, it clearly seems to have reversed and formed a good rounding bottom kind of here, or here it is holding well to its parabolic star. In fact, it's trading below its parabolic star. So on the Nifty mid cap, I would say on the upside, 12,700 will act as a resistance. About 12,700, we can see the levels of 13,300. Let us also look at the channel targets. Channel targets, I'm sorry. Comes to 13,200. Now, as of now, since the markets are not live, I would have not seen the open interest and all. Otherwise, I would have shown the open interest and all on the Nifty chart as well. Okay. But thereafter, on the support on the low side for this Nifty mid cap is somewhere around 11,900, and below that we have 11,600. 11,900 to 600 is the support range, whereas 13,100 to 13,400 is the target range on the upside as far as Nifty mid cap is concerned. Okay, 1,000 points up, 1,000 points down. That's all it is. Let us look at Nifty small cap index. Now, small cap index has basically, and looking at the chart, you can see that it has outperformed the mid cap index somewhat. Okay. Now, if you look at the hourly chart, the overall rise on the small cap index appears to quite be an impulsive move that will clear 5-year rising structure. So, even if I want to take the equality target on the upside for small cap index, we can just have the equality target on the upside for small cap index. It comes to 39.95, which is roughly around 4,000 is what we can see on small cap index. Right now, it is trading around 3800 to 200 points more. So, around say 5% move is still what we can expect on Nifty small cap. Till we see this 50-day exponential or simple day moving average is held, and that is coming around 3600. 200 points downside, 200 points upside. So, on Nifty mid cap, we have 1,000 points up and down from current levels of 12,300, 400. And on Nifty small cap, we have 200 points up and down from 3,800. Right? That is what we have actually derived on Nifty median small cap index. Now, which sector, according to me, in this market scenario, seems to have bottomed out. Okay. Prior to that, because that is the last thing which I'm going to cover today, that this sector clearly seems to have bottomed out, and we all know that which one would that be. But also, let me tell you that you can also derive the view looking at Nifty. This is the chart of Nifty when you have daily, hourly, and weekly charts. To see this so sync that everything changes accordingly on your daily, hourly, and weekly charts. Now we can also press F5, and thereafter you can actually look at the open interest data and everything. That whether the open interest is changing plus positive, and then you can look at this strike prices, and you can see where the which strike data should I buy and sell. You can look at this entire options chain as well over here. Come to know where the highest open interest is and where not, and all the Greeks as well. You can look at here, so you can form a view from there as well. And let us also looking from weeks. Let us also look at the India weeks. Okay, so what is India weeks happening? Now, India weeks in the last trading session, in fact, close in the positive territory, and in fact, you see in last couple of trading sessions, we've been seeing that it's from lower end it is jumping, it's from lower end it is jumping, from lower end it is jumping. So this VIX has actually cooled off quite a lot. I would say from 84 levels to almost like 43 levels, which has cooled off. It is in fact, fallen by almost 50%, which is quite good. And because of that falling of VIX only, we have seen this market in fact bouncing back by almost 20%. 7,500 to 9,000 plus is like 20% move overall from the bottom. So Nifty has bounced back by 20%. I would say in the last week itself it bounced by 15%, which is quite good after such a sharp fall. Now, till this VIX continues to remain, a bit in this range of say, from 60 to 40, we can see market, consolidating to be in the and only about 60 to goes, and then after, if it takes off this parabolic star, then we can assume that new kind of the upside has started, and a fresh leg on the downside has started, which eventually will happen is what I think, because there is one more leg on the downside which is coming on market. I think that down like should come not now then later, maybe in the medium term, because we have already seen that crossover. You've seen momentum indicators, KST, MACD, everything in the sell mode on the weekly and monthly charts. Lower tops and lower bottom on the weekly charts. On the monthly chart is still there, and the monthly lower high is too up from the current levels. If you see the Nifty, I mean, and if you want a medium term trend, to be seen that when there can be a monthly reversal. The monthly reversal is too far. It's like all-time highs only. So till we don't see a higher bottom formation on the monthly chart and everything, and the indicators reversing, how can we see that the bottom has been formed clearly? Longer term basis. Hence, till that evidence are not there, we will term this as a short term, short covering rally or a delicate bounce or a bull market trap or obviously it's also called as a suckers rally. All of this will determine and will continue to play as it is. That's what it is as far as Nifty is concerned. Now, one sector which I wanted to show that seems to have broken out and why is the Nifty Pharma Index. And this is very obvious because we have seen Nifty Pharma Index, in fact, most of the pharma stocks, in fact, having fallen quite a lot and having bounced back also quite a lot. So, see, generally, I look at all the log charts. The log charts give you a better presentation. Linear chart doesn't give you that presentation. Which log charts give you when you're looking for a long term. See. Interestingly, if you see that what has happened on the monthly chart, I would say, see, so we have seen that Nifty Pharma Index is very near to providing a breakout on the monthly chart now, the monthly channel, I would say. Sorry, the Nifty Pharma Index is very near to forming, providing a breakout from a falling channel. That is very important. I mean, it is not provided, but it is likely to provide. Now let us look at the momentum indicators on the monthly chart. So this is the parabolic chart, and let me add MACD. Give the parameters 12, 26, and 9. Then let me add KST. Yes. Now see, the KST has already provided a buy crossover. MACD has also provided a buy crossover. You have got a buy crossover in the momentum indicators on the monthly charts. Now all that with a positive divergence. Look at the divergence here in the KST. When the prices were falling, the indicators didn't fall to a new low. That is what happened on the chart of MACD also. Although it almost formed kind of a double bottom, but the KST clearly shows that divergence was there, positive divergence. Positive divergence was there, and now the prices reversed so sharply, and then indicators have provided a buy crossover on the monthly charts. Let us look on the weekly charts, and here you can see the positive divergence as well. So clearly, and the prices had actually fallen, and we are seeing the momentum indicators going up. And that clearly shows that the bull market seems to have started in a pharma. And you can see the 200 DMA as well. It is well above the 200 DMA and 50 DMA. It is well above that. And now it is likely, now it is very likely. Here it was about to provide a golden crossover win. Now at all, if the prices goes up, move very close, but it did not provide a buy or a sell crossover. Now if prices go up, it will also provide you a good golden crossover. The prices have already moved about 20 and 50 daily moving average. You've seen on a daily RSI is well above 50. You can see the weekly RSI also where it is. You can see the weekly momentum indicators and all of them are well up. Let us see the weekly RSI where it is. Yeah. Now let us see. The weekly RSI is still at 49.50. So it has already reached to the middle level, midpoint. So RSI has reached to the midpoint here. You can see. It has reached to the midpoint. So it clearly goes above the midpoint. Like it has gone on the daily chart. You can see on the daily chart the RSI is somewhere around say 58. So it has gone above the midpoint, which is a good sign. In the weekly chart also that happens. That will be a further confirmation. It is just that now on the weekly chart it has come to this 200 weekly moving average, which coincides with the monthly falling channel resistance. So this resistance is going to be acting as a very crucial level. Also, pharma index from here on, if it is also forming lower top, lower bottom here. It took off its previous lower high, which indicates a trend reversal. It has also provided a breakout from this falling trend line out here. So now, I'm sorry. So this will act as a support now for pharma index. 8100 will act as a very crucial support. I don't think that pharma index should again fall back below 8100 or 8000 levels. Okay, it has provided a breakout from this. Okay, and if it once it provides a breakout from this swing high now, which is the next resistance of 9163, say roughly 9200. No, not 92. It is 9578, 9600. I'm sorry. Once it provides a breakout from 9600 levels, thereafter then you can get a further confirmation not only from the breakout of the previous high again, but from the downward sloping channel as well. The monthly indicator is already provided by crossover, which means that sooner or later, it will eventually do that. And that is what it should, because this happens with a positive divergence. Pharma is a clear buy. Now you have to look at the volumes as well. The volumes have started to expand here. Then it expanded here and now it started to expand. The same like Nifty is up now, but then considering the market participation right now, the market situation right now, it's good. In fact, what had happened is in the entire fall, year, till now, the volumes actually expanded quite a lot, and we are seeing selling in the pharma index. Now, year and year, you can see the volumes have increased. You can also see at the volume RO or volume OBV. That is very much important indicator as far as volumes are concerned. You can see volume OBV. That has reached to quite an oversold territory now. And then on volume OBV, now we have been seeing a good uptick happening. Reversal has happened from down to up. The volume overview is also showing a good sign that overall the probability of now stocks getting accumulated on pharma is quite high. Otherwise, volume overview would continue to go down if this is a rally without volumes. So that's not the case because this is rising. So you can see this is the pure delivery also which is happening, and this is the bull market which seems to have started on the pharma index. And since the bull market on the pharma index has started, you see that the bear market on the pharma index started somewhere in 2015. So we've seen a good long 5 years of bear market. How much do you want? 10 years, 15 years of bear market? I think we had a third wave rise on the upside. This is the fourth wave fall. Or whatever it is, maybe first wave rise and second wave is lower. Overall, I think this 5 years fall seems to have got over because that time the MACD has provided a sell crossover and we saw the index going down. And now the MACD or the KST, when it gives sell, it came into bear market. So when it's coming to buy, let me assume that it has come into bull market. So I think that's what has happened. Also, let me look on the monthly chart where the Bollinger Bands are, what they are indicating. So you see, prices have moved well above its mean, the white line of the Bollinger Bands. In the generally bear market, see here also it had done work, but generally in the bear market, what you see that it goes to the mean, falls down, goes to the mean, it falls down. Here it once attempted, also it had given a buy crossover here. See, once it attempted to come into buy, bull market, but it failed. And this it has attempted again with a positive divergence. It has gone above the mean again. So I think this time around, since it is a positive divergence and all, since it is a breakout from a downtrend and resistance, I think now again there is a very high chance that pharma index seems to have bottomed out, and you can see 14, 15,000 levels coming forward. If in a year or maybe two, but 40% rise or 50% rise if you see in a year or two in pharma, it is a sector worth investing in now, investing in from here on. I've been saying this since past 10 days now. Since past 10 days, I've been saying that pharma is a sector, because see what happened in March is that we saw this monthly MACD actually providing a buy with a good positive divergence. So I'm giving you good enough, data as far as charts or in the short-term current market scenario is concerned. That this is a bear market rally, 90 200, 93 100, 200 200 hourly average, where it is coinciding with 38% on 38.2% retracement on the hourly charts, on the daily charts, on the Nifty. So 92, 93, 93, 50, and thereafter 97, 98. These are the targets on the upside. 87, 89, 87, 83, and 8,000 are the supports. Bank Nifty. Also, I said that 20,400, 18,600 is the range. Below that, 17,500 and 17,100. Whereas on the upside, 22,000 and 23,000 are likely in the support range are held. Mid and small cap indices also, I told you 3,800 is CMP of small cap, 4,000 to 3,600 is the range. And for these mid cap index, I've given you the range of almost 1,000 points from 12,380, which is the CMP. And I've given you one sector which has bottomed out and with a very high probability, and that is Nifty Pharma Index. One sector which can go back to its previous high at all 14,000, 15,000, and give you 50 odd percent returns in a year or two. So that's all from my side, friends. As far as current market scenario is concerned, continue trading on the upside in the short term unless you come to know that the trend is again reversed from up to down. But play this bear market rally very cautiously because we don't still have complete evidence that the long-term bottom has been formed. Thank you very much, friends. Nitesh, over to you.
Okay, thank you, Jason. It was really amazing information that you provided to us all. I hope, audience, you got what you were here for. It was definitely one of the most amazing session we had today. Lots of information, useful information that we can put into our personal trades also. So thank you, JG, for being here with us.
Pleasure. Pleasure. Thank you.
Yeah, and sharing such quite uh, useful information with us. Thank you, audience, for being with us, for joining with us, and keep supporting our webinars and keep joining so that you can get more and more information about the stock market, about the future and future of the stocks, everything that you need to know where market can go ahead. So, thank you everyone for being here, and thank you, JG, once again. So I'll
Thank you so
just
much. And I would appeal everyone that you continue to remain home till the lockdown continues. Stay home, stay safe, and God bless everyone. Thank you.